Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always, or most of the time at least, the University of Missouri's Ben Brown. Ben, how's it going?
That's good. It's good to be back. Thanks for having me, Will.
Yeah, so Ben, you had an eventful week last week, but we're glad you're back here and, safe at home. You made a trip out to Ohio for, was it a webinar for a kind of
No, it was a full day workshop on Friday, and then had a retirement party for a dear friend, and was on my way back. And it is reassuring, Will, that viewers watch our program each week, because I had several people reach out and say, "Hey, I saw Pat mention that you had a busy week or an eventful day." And for our viewers out there, my car got stolen while I was pumping gas in St. Louis, and so I didn't have a car, a phone, or a laptop for a couple of days. But we're back now.
Back and better than ever. So, Ben, it is good to have you back on here. I'm going to go ahead and give a quick recap, rundown of where we sit on the week. So, March 24 corn down 2 cents at 4.45. December 24 corn down 6 cents at 4.75. March 24 soybeans down 4 cents at 12.23. November soybeans down 4 cents at 11.97. Soybean oil on a cents per pound basis for March down 2.19 cents at 48.16. Soybean meal by the short ton for March down $7.50 a short ton at 355.80. The 23 wheat crop for March, it was mostly flat at 596, and then crude oil for March up $2.02 a barrel at 74.67. So, Ben, a lot of sideways trading really for corn and soybeans. Looking at that, some losses coming in other areas, and then a little bit benefit or uptick on the crude oil. What's your impression from the last week on what we saw?
Well, you hit it on the nail on the head. A little bit of sideways trading here, and I think that'll continue for a period of time. Probably most surprising to me was that soybean complex. We did see a very strong soybean report last week. That was that National Oilseed Processors Association report that showed a record 195.3 million bushels crushed in December. I thought that might give some support to the soybean complex. It did for a period of time, but we ended the week down 6 and 4 cents respectively.
Sorry about that. Looking just where we sit maybe in the general economic outlook as we see things, looking here recently on things like the Dow Jones and the S&P 500, some kind of sideways moving in the overall market as well. And Ben, I want to talk about consumer sentiment, and something that you've noted is that it is up since July of 2021. It's increased quite a bit here over the last several months. So there is optimism in the market, and maybe some, expectation of tampering inflations and rising income. How does that really feed into where we look at ag commodities in the agricultural market?
Yeah, so that consumer sentiment, did reach its highest level since July of 2021. Again, this is, based on expectations of the future. So, if you have a very optimistic outlook, the index goes up. It doesn't necessarily mean that conditions are better. It just means the expectations are stronger. And I think that, there is some resurgence of optimism in the U.S. Economy, both in terms of, we've seen spending continue to surge. We've seen incomes, slowly rise. That's part of that wage increase and that wage pressure that we've been talking about. All in all, I think this feeds into, maybe a tampering of expectations that the Federal Reserve will cut interest rates in March. That was what the market was expecting for the first interest rate cut at the beginning of January. As of today, that's already been pushed back to May. I think we could even see it being pushed back a little bit more. It is an election year. So it is, a lot of people say it's hard to raise interest rates in an election year. But certainly, I think, given the jobs numbers that we've seen and the potential for inflation return at the back end of 2024, I would not rule out an interest rate cut interest rate increase for 2024.
Just noting an election year, it is kind of fun to watch things like gas prices kind of fluctuate depending on where year it is. I'll just, I guess, leave that where it is. But Ben, looking at the recent movement, recent action within a lot of agricultural commodities, we noted a lot of sideways trading into this week. But as we look maybe down the road, what are your expectations on where things might be headed overall, based on that sentiment for things like grains and oilseeds?
Yeah, well, so when we think about funds, and again, supply or price is a function of supply and demand, but it's also modified by the flow of money and the expectation of where money is going to flow. And we've been, on this program, we've talked about, the commitment of traders, looking at producer and merchant holdings. To me, we have built a very large short position across most of our commodities in the managed money category. Now, what does this mean? Well, it means that at higher prices, when corn was at $4.50, $5, or $5.50, $6, any of those funds sold in the hopes of buying back at lower prices, and we've certainly seen lower prices. And corn is quickly getting to a period where it could go lower. We could see even shorter or larger short positions, but historically, this is about as low as it's gone, to where we start seeing these traders start to buy back into their positions to profit take, right? They don't want price to go higher because then they're losing money relative to where they're at today. And so if we see a stabilization or the threat of higher prices or softly higher prices, we start to see those traders exit out of those positions. And I think we'll see some of that in the next couple of weeks. I think we'll see people profit take, exit out of their short positions in most of the commodity markets. For corn, I think it's probably likely, just given the uncertainty about Brazil's planting of second crop corn, and they don't want to get caught with higher prices, and so that'll provide a little bit of stability for the corn market, I think, over the next couple of weeks. That's certainly not saying that corn is going back to where we've been, but it certainly does mean that we could see a little bit of an increase in the corn market, at least in that near-term contract here the next couple of weeks.
Well, looking at individual farmers and what they may be holding on to in grain and storage, as they watch that, as they see funds maybe take short positions on grains, looking to sell them and then attempt to profit take later, what advice might you have for farmers looking at trying not to get wrapped up in that and then caught, between, selling whenever there's a profit taking going on?
Sure. So, it's no secret at this point, there's a lot of corn in the United States. We've talked about that, to where, there's a lot of unsold corn here, but there's also a lot of unsold corn in South America as well. These rallies have been rather mute, and that's my point about do not expect corn to go back to where it was. Because as we've seen a little bit of a rally, it has induced selling by farmers, which has then, kicked back the price a little bit. So, I think that's where we're at is, there'll be a few opportunities in the futures market to gain a few cents here and there, right? Like to be able to, pick up. I do worry about the basis market. It's been very cold here in January. That tends to be a problem for ethanol production. Or slow ethanol production, if you will. And so I think some of these increases that we've talked about in the futures market could be countered in the basis market. So there might not be a whole lot of change in the cash market for producers. And that's just kind of where we're at, right? Like I'm not expecting a big rally in corn prices. And so at this point, we're just eating storage costs by keeping it in the bin.
And then, Ben, looking at one of the final things that we were really going to hit on today, we saw a record soybean crush in this past December, in the most recent National Oilseed Processors report. What is your expectation moving forward for how that's going to impact, the crush values and things of that nature when you're looking at that oilseed market?
Sure. So just a ginormous crush number there, 195.3. That takes, we anticipate that'll take total U.S. soybean crush well over 200 million bushels for only the second time ever. We eclipsed that mark in October. And so a very big month, and certainly record, oilseed production that increased soybean oil stocks above expectations. But that's not to say that we weren't using soybean oil. We were, and we saw a very strong soybean oil use number there in December. I look for all those to continue as we move forward. We'll probably pull down a little bit. Same thing applies in the soybean oil market as it does the ethanol market. It's kind of hard to run some of these plants when it gets very cold, like what we've seen. So, that'll probably pull down just a little bit in January, but certainly the trend continues. I think 8 out of our last 10 months, we have set single month records in soybean crush in the United States.
All right, Ben. Well, as we move throughout this week, what should farmers and ranchers be thinking about when it comes to looking at grain prices?
Yeah, so nothing out of the ordinary. We've got the energy report this Wednesday, export sales on Thursday. Again, export sales this time of year, kind of, we're if you're a seller, you're looking at those hoping to see a surprise. We normally don't see a whole lot of new soybean sales this time of the year, and certainly with Brazilian soybeans being so much cheaper than U.S. soybeans, we kind of look to that report in the hope of seeing something. Again, if we're a seller. So that's where that'll be. And then next Tuesday, we get our next update from State Stories. This is really our only indication of winter wheat conditions this time of year.
All right, Ben. It's been good having you back, and always a pleasure having your knowledge on the program. Viewers and listeners, if you'd like to learn more about us and what we do, you can check us out at brownfieldagnews.com. You can also find our sister program, the weekly livestock market update, at brownfieldagnews.com. I'm Will Robinson for Brownfield.